please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Record flows on the Wall Street and the Asian markets have taken those cues in their stride.
It will be a combination of restructuring as well as focusing on growth.
The IMF has projected India to be the fastest growing emerging economy in 2018.
There's a good chance that the move from 11K to 12K is now led by large caps.
11,000, 11,002. Wow, I'm glad to savor that number.
Am I fully invested? Yes. Would I put fresh money into the market? Yes.
We're up 100 points plus 11,069 is where we are at this point in time.
Okay, yet another day of record high for the market, and once again the bulls having all the momentum. As we turn to last hour, let's see if that momentum can continue. This is Closing Bell. I'm Anuj, with me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. Another good day. I think we're just getting tired of saying it, but the market is not tired of hitting fresh levels, fresh highs. Today, it's pretty much all-rounded. We're seeing the mid-cap index participate. So what's your take on things so far?
Yeah, I think, as we discussed in the morning as well, Surabhi, this is a market where, it will now force a lot of bears to turn bull, just, force them to cover their shorts. Indices hit fresh milestones and at no point did they turn. The Nifty hit 11,000, Sensex at 36,000. Conventional wisdom would have been that at that mark there would have been some profit taking. None of that happened, and that led to further short covering. And this is expiry week, and that's adding to the momentum. So right now, it's just go with the flow, maybe with some risk management in place. Banks are doing well, IT is doing well, other heavies are chipping in. So something or the other is working for the market. In the mid caps, I think PSU banks and metals are rallying. So once again, showing the mood on the street. Though the advanced decline is not really very strong. It's in some pockets there could have been some distribution, but that's nitpicking really, Surabhi. It's just been across the board buying today that you've seen.
I think barring one or two stocks, maybe an HDFC Bank or maybe a Yes Bank, some of them which are sulking, everything else is just sort of on fire, particularly in the large cap space. Let's get you the headlines on Closing Bell this afternoon. The market fires on all cylinders as the Sensex scales the 36,000 mark, while the Nifty conquers Mount 11,000. Support seen across the board from metals and pharma. Mid-caps shine as that index gains over 0.5%. Metal stocks shine, with the index gaining nearly 5% as high beta stocks find favor with traders. JSPL leads the charge with gains of over 9%. The International Monetary Fund releases its World Economic Outlook, maintains 2018 growth forecast for India at 7.4%. Global growth estimates revised upwards to 3.9%. Prime Minister Narendra Modi becomes the first Indian Prime Minister in 20 years to attend the World Economic Forum at Davos. He will deliver the opening keynote address at the summit in just a few hours from now, in fact, around 3:45 p.m. India time.
Okay, how should you position yourself in this last hour of trade? Ashwini Gujral and Prakash Chhabra now join us with closing strategies. Good afternoon. Ashwini, your thoughts on the way, we've seen the trade today. Is there a last hour call on the index and stock calls?
The index has corrected from higher levels, but I think there's way too much going for the index for it to come off substantially. So maybe, the momentum can carry it a bit further. Whether you want to buy a fresh or not, that really depends. If you are willing to carry and if you are willing to see, 50, 100 points worth of decline, then you can do those things. But if you want a nice entry point, those entries come when, there's a plunge or, there's a down day. You cannot be buying a market which is continuously making new highs. That's the way, I like to do things. But overall, so far, it does not seem like there is a substantial cool-off that is happening or is on the way in the last hour. As far as individual stocks are concerned right now, Chambal Fertilizer is a buy with a stop of 153, target of 168. ONGC is a buy with a stop of 203, target of 217. And Canara Bank is a buy with a stop of 364, target of 382.
Okay, a lot of stocks moving to the high point at this point in time. Of course, we've been talking about PSU banks. Adani Enterprises has moved to high point. Also want to pull out the intraday chart of Mahindra and Mahindra Financials. That stock as well has moved to high point of the day and comes out with numbers and Abhishek was telling me that maybe this quarter you expect good numbers from M&M Financials. In the past it's delivered bad numbers and still has rallied. So maybe the street is expecting that if this time they have to deliver good earnings, what would happen with the stock? So you've seen that stock move to the high point. But Prakash Kaba is also with us in our studios. Prakash, good afternoon. Your thoughts on trade so far and your stock calls?
Well, good afternoon to you, Anuj. The target that I had for the day was 10,955.64. That's easily achieved. It's gone beyond that. Now, the next logical technical targets are 10,138. Looks like it's heading there tomorrow because what I see on Nifty and Bank Nifty, especially so in Bank Nifty, it's a short squeeze. It's a short squeeze that's taking the Bank Nifty up, that is resulting into gain in Nifty. And perhaps that could happen tomorrow as well. So we may see some profit booking in the later part of the trading session tomorrow, but looks like the short squeeze is taking it up. So I have two stocks here, both long here. Bharat Financials looks good. Perhaps we can see a climb to around 1045 zones, stop below 1010. And GAIL, Gas Authority of India, is looking good. We can see a move right until the levels around 490. May take a day or two for that, stop below 460.
Okay, all right, Prakash, thanks for those trading ideas. Well, we also have Anand Tandon joining in a bit. We'll also have Mr. Tulsian join us in the conversation. Good afternoon, Anand. What a rally for this market. It just moves from strength to strength on a daily basis. Specific call on the metal rally, which has resumed after a bit of a, sort of peaking out. Would you buy into any metal stock afresh? Which one would it be if that's the case?
Well, the current year earnings growth is likely to be driven by metals. So if you are going to believe that the market will continue to go up, I think it makes sense to also participate in the metal rally. Specific stocks, obviously the market leaders is what I would go with. So no particular reason to be looking at smaller companies. Commodity sector is played best with the larger caps.
Okay, PSU banks, by the way. Something is up here. Look at the intraday chart of PNB. It looks like a PNB, move in particular. Others are also moving, but that one has moved to high points. So there's a second round of buying that's happening. Talking about PSU banks, Shireen is with one of the biggest bankers in Davos right now with the SBI chief, Rajnish Kumar.
Well, we're continuing our coverage here from the World Economic Forum's annual summit at Davos. Just about an hour to go for Prime Minister Modi to address the plenary session. Joining us here is the SBI Chief, Rajnish Kumar. So thanks very much for joining us here on CNBC TV 18. Foreign investors continue to be optimistic about the India story. The question now is about domestic investors and whether we are starting to see investment change and the investment climate change when it comes to domestic investors. What's your own sense in terms of project sanctions, etc.?
Project pipeline is still, I would say, is not as strong as we would like it to be. But otherwise, we know that domestic large corporate houses, they had some problem on the leveraging. Many corporate houses, they had issue on the asset quality front. So we are gradually coming out of that. And once that happens, then we can see better investment climate in the country as far as the domestic...
You're saying gradually coming out of the deleveraging problem. NCLT, the first list and the second list, how confident do you feel about things moving on both of those?
So right now they're on the track. Of course, in most of the cases, there was a time extension of 90 days, which is permitted as per the process. But quite a few cases, the resolution plans have come in and they are being evaluated. So the first list, which was deferred sometimes in July and August, I am very hopeful that by end of March or mid-April, at least for those 12 large cases, the decision would have been taken.
By April or March for the first list?
First list. Okay. And then it is a continuous process. And now it has become a continuous process for the banks and the financial creditors also. That wherever they feel that the resolution or any settlement is not possible or not seeing the light of the day, then the best course of option for the financial creditors and as well operational creditor remains that they go to the NCLT and initiate the process on the insolvency and bankruptcy court. So that way, it has become some sort of a time-bound process and brought a lot of time discipline.
So what about the second list? If you're saying first should get resolved or at least meet with some kind of conclusion by March or April, then what about the second list?
So second list was all November and December. So that would be somewhere in June or July.
Okay.
Before we can see the resolution plans coming in. But in any case, that should now become a part of the normal process.
Okay. What's your own sense on loan growth, sir? Because it's, it's flattered to disappoint so far. What's your own take on that?
So if you look at from the sector specific, then consumer loans are growing at a very good pace and there has not been any slowdown. The corporate credit is still, the growth continues to be muted. And which it will remain for some time, because as we press that the corporates have to deleverage, that is one. Second is the sectors where there is overcapacity, then the people would not like to invest. But the investment will definitely be the sector-specific investment. One big turnaround story which I am seeing is around the steel sector, where everybody is bullish. And 1.5 years ago, there was a lot of gloom and doom around the steel sector.
Okay, so steel, you're seeing a recovery.
And that is evidenced by the fact also that in all the steel sector references to NCLT, there is a lot of interest amongst the investors, both domestic and overseas. So this is a sign of the things to come. And the steel sector is one sector which is one of the core sectors and which indicates shape of the things to come. If the steel sector people are bullish, it means that they are bullish about the overall economic recovery.
Right. You know, the Prime Minister is going to be talking about the reform agenda, and one of the achievements that the government would like to talk about here is the PSB Bank recap plan. Any more clarity now on when and how much we're going to start to see come in to specific banks?
So 80,000 crore is what this year's plan is.
That's right.
And this is in addition to what some of the banks have raised capital through QIP and this thing. So this 80,000 crore is the recapitalization bond. And 10,000 crore was from the budgetary support, which has already been announced and given to the banks. So this allocation, I am expecting that this should happen much before the budget.
That is before the budget.
Before the budget.
Okay, that's interesting. The allocation should happen before the budget. Budget is next week, so obviously that means pretty soon we should have some more news flow on that. Of course, today PSU banks have done well. A lot of news statements actually from that interview. Actually, let's just go back because he's making some important statements, and I think the market is reacting. So let's just listen.
Demands for those banks which are falling short of the international capital adequacy requirement. So they also have to be given priority. But going forward, definitely what I feel is that the remaining capital, the more allocation will be coming for the growth, and this time probably the allocation would be more to meet the capital adequacy requirement. This is my sense, but ultimately it is a matter of a few days and we would know.
Do you think consolidation is likely to be a theme in 2018 in the public sector banking space, or do you think that perhaps it will be a little bit longer?
It will be a little bit longer. In 2018, the capitalization, the cleanup, the resolution, all this should happen. The banks, they will need to put their business strategy also in place. That going forward, what changes they need to bring in their business strategy. And once that has been done and the banks become stronger and come out of the current position, which is not very strong. So once they come out of that, then one can think of consolidation.
Okay, I think that was the important statement. So I just wanted to go back. Expecting the PSU recap bond allocation to happen before the budget, and it's no surprise that SBI is the one leading the rally. The stronger PSU banks, you saw PNB, Indian Bank, couple of these stocks actually surging, and SBI, as we speak, has moved to the high point of the day. So was also talking about the fact that steel is attracting a lot of interest. So talking about the NCLT issue. So a lot of points that we've got from this interview that we got with SBI chief, and I think the market is listening to that. The PSU Bank Nifty, that's the one which is now at the high point. SP Tulsian of sptulsian.com is also with us. Mr. Tulsian, good afternoon. Big rally in PSU banks. Your thoughts? You have been bullish on the stocks, of course. Yes.
Anuj, I think combination of 3 or 4 factors. First, to start with, yes, probably the street is talking of issuance of the bonds to the extent of about 80,000 crore before budget. Now let's see how much quantum it gets to. If it comes to 80,000 crore, then it will be extremely good, number one. Number two, the kind of statements, which we have seen maybe from the Tata Steel MD Narendran, that yes, this is the best time for the steel player to look for the inorganic growth through the NCLT cases. And we all know that there have been 5 cases in this, and the bid for all those are coming to an end maybe by middle of February. And the kind of fillers or the informations which we get, that everyone is seen quite aggressive. There are about 8 to 10 serious bidders, including from the domestic turf as well as from the global turf, who are keen to acquire these all 3 or 4 assets like Monet Spath, Bhushan Steel, Electro Steel Steels, and all sort of things, SR Steel and Bhushan Power. Thirdly, the kind of news flows which we have been getting, that 3 or 4 companies out of the 28 companies, which have been identified by the RBI for reference to NCLT, 3 or 4 of them are seen to be, seriously now at an advanced stage, of the reaching to a settlement, either as a CDR, which they have got it earlier approved, or through the settlement. And if that happens, the quantum, which is being talked of is about 45 to 50,000 crore of those 3 or 4 accounts. So if that happens, that will also be seen extremely positive, because the time is already started clicking in. Maybe the NCLT matters will come up for hearing, and before that the settlement has to have happened, with the lenders and all that. And that's again one positive news seen coming in. And then lastly, the kind of tapering off, or maybe the fall in the asset quality, or we have not seen that asset quality worsening happening in any of the private sector banks. The results are seen. Same thing is seen happening for the PSU banks also, that probably we'll see the stoppage of this asset quality worsening, and maybe Q4 will see part of that as getting reversed also. So maybe catch up between the differentials between private sector bank and public sector bank. So taking all this into this probability, and even if couple of them gets fructify, I think this will be seen quite positive for the PSU banks.
Well, big rally on PSU banks underway. 4% up on that index, and almost every constituent participating, whether it's Allahabad, BOB, Indian Bank, Union Bank, you name it. It's a big move out there. Well, we have to take a quick break on that note. Here's a programming reminder. Ahead of the union budget, CNBC TV 18 brings together the brightest team of experts who will decode the budget agenda. Catch Rhythm Desai, Nilesh Shah, Abhay Lajwala, Sajid Chinoy and Dinesh Kanabar lay down the wish list for the finance minister. Catch all the action live at 5 p.m. this evening at the Bombay Stock Exchange. Time for a break. When we come back on the other side, we will get you our weekly segment, Kedianomics. We'll have Sushil Kedia join in and decode the charts for us, talk about this big rally and how you can play it next.
Minimum alternate tax has become quite burdensome, and in order for incentives to work, it is necessary that the MAT rates are also brought down, and then we can be competitive with the US, and other countries are bound to follow.
Welcome back. So it's a whole 1% up again on the Nifty. We are approaching the highs of the day. Should also keep in mind that it's also a good global day. Most of the Asian markets have had very steady gains in our neighborhood. And some of the markets like the DAX, for instance, are trading with strong gains as well. So it's a decent global setup. And of course, we are charting out our own course. But Anuj, your thoughts on the PSU rally? I mean, what I was thinking was that from whatever we heard Mr. Kumar say, I mean, typically it was not new. We know that there is interest for steel cases. We know that there's corporate loan growth, which is yet to recover. But is it that kind of a market that's just latching on to positive commentary?
You know, I was talking to Mark Mobius about this, and when he said that they are now moving some of their overweight positions from private banks to PSU banks, and just one reason for that is this PSU bank recapitalization, and the fact that you have now this clear timeline, and now you'll have the allocation as well before budget. So that means we're talking about next week. Just if you see the chart of SBI and PNB, and we don't get volume in this chart. If you see the volume, almost 3 million, 5 million kind of shares in both of these. These are the two big PSU banks, right? Bank of Baroda as well, maybe third. But, like the kind of buying that you're seeing here obviously is indicating that once again, smart money, a lot of large money is moving into these stocks. And as you said, this is a market where, you're hungry for ideas. And these stocks have corrected. Keep in mind, they hit that big high on
the
that
day the recap was
on the day of
announced,
recap,
yeah,
and after that for 2 months, I think they kept consolidating, kept correcting, and I think that is the move that you're seeing now. Follow-on move is what you're seeing on PSU banks.
Speaking of moves, pull out Delta Corp. This stock also from where to where. And we are talking, just in this month alone, the month of January, about a 25% up move. And that's your chart today on Delta Corp. It's just a different kind of market, perhaps. Good time to get stock specific and take some of the questions that we're getting on social media. Monica wants to know if Godrej Properties could be a good buy at the current price levels, or whether she should invest in maybe some bank stock or an NBFC instead. Ashwini, interesting question. And just yesterday, I remember you saying this, that Midcap Realty is looking, like it has a lot of momentum. Would you go with Godrej Properties or any other alternatives that you would like to suggest?
See, it had momentum 1 year back when Godrej Property used to hang around 450, 500. Now you have to understand that things have appreciated, and the 50-day moving average here is about 750. So if she can get it close to 750, and you will get it, today it seems there will never be a correction. How can this market come down? One day there will be. So that would be at the time where you want to get in, because this guy, in January, I think from 700 to 900 has been a large move. So I would think if you get in at about 750 thereabouts, that should be good enough to take you into 4 digits and maybe even higher.
Okay, let's move on. Akash has 500 shares of GMR Infra at 23.75. Wants to know whether he should hold or sell. Mr. Tulsian, we've seen a big rally in all these companies. On GMR in particular, what's the call?
See, Anuj, firstly, this investor has not given his time horizon and when he has bought. It seems that probably he has bought in this current maybe momentum, and he has no patience. The moment you start, either stop not moving up or it starts correcting. And as such, if you take a call, the current price seems to have all the positives seen having factored in. So my advice is that he is now seeing the share ruling at his cost and seem to be more impulsive of not share moving up and with maybe near-term time horizon. So I'll advise him to exit from the stock at the current level.
Okay, that's an exit advised on GMR Infra. Chandrasekhar has 1,000 shares of Rain Industries at a good buy price, 250 rupees. He wants to know a view on the stock. Now, from 250 to what are we talking about today? 427. Ashwini, should he keep holding? If yes, then where do stops come in?
See, Rain Industries went through a decent correction, and post that it has restarted its rally. So I would think your stop should be now closer to 390, 400. And if the stock again picks up, I think levels of 540 seem likely.
Okay, the last one, we have Anudhyan, 350 shares of JP Associates at 30. Wants to know whether to hold or sell with a long-term view on the stock. Mr. Tulsian, the numbers look good, but the stock has also rallied. What would be your thought here?
So, Anuj, maybe numbers, I won't give much credence to the numbers, which are definitely seen to be good in their core business. In this EPC, they are seeing some kind of improvement. But the stock has corrected in this last 3 or 4 days. And in fact, the relief, which if we once get to hear from Supreme Court in matter to JP Infra, because JP Associate has to deposit 125 crore by 27 January, and that date is we are approaching quite fast in the near term. So that will, I don't think that company will default on that. There are many suitors for the company. JP Associates has been proactive in settling the major of its debts and all that by selling the cement division, and even they are in talk with JP hydropower projects also. So taking all this into account, maybe the stock, the group can bounce back, and the kind of, if the banks or lenders are not referring JP Associates for NCLT, that will also be seen positive, which we will get to hear only once the Supreme Court gives order in case of JP Infra and JP Associates home buyer. So my advice is that remain invested with a long-term view, because this investor has a long-term view. So my advice is that remain invested into the stock.
Okay, that's JP Associates, still good on this market. By the way, today is a decent day for a couple of gas stocks as well. Gas-related players like GAIL, Petronet, they are beginning sort of a move as well. Anand, your thoughts on this? Because, with this HPCL ONGC deal, there's also some talk in the market about how it will be funded. So if, cross holdings could start coming up for sale, and then there's a supply overhang in the market. So whether that's going to put pressure on companies, government-owned companies where there are cross holdings. Would you buy any gas stock?
Generally, it's been a positive space, and I think the energy requirements are not going to go down, and more importantly, gas as a part of it is likely to continue to rise. So companies, not just gas producers, but also the pipelines, I think, to me, are the more attractive place. I don't think that right now anyone is worried too much about an overhang in terms of supply of stock. That seems to get lapped up very quickly. Even if you look at some of the recent IPOs, the kind of subscription that they have received is way more than the size, despite them not having a very clear track record. The companies that you are talking about obviously are already well established, and therefore are not likely to see any dearth of demand in current market conditions.
Okay, Anand, we will thank you on that note today. Thanks a lot for taking time out for us. Mr. Tulsian, before we thank you, I just wanted your thoughts on the kind of move we have seen in a couple of stocks. One is Havells at 580 right now, and the other is Jindal Steel and Power, 10.5% higher on that stock now.
See, Anuj, first coming on Havells, I think they have shown the flattish kind of numbers in all their divisions like cable or maybe Lloyd, but consumer durable has really shown a good growth, and maybe other sectors will start showing the growth because of the reduction in the GST and all that. And management has been, very confident on acquisition of Lloyd, and we will be seeing the ramp up scene happening on that front also. May not be in the 2 quarters. So stock is again, liked by the institutional investors also. It has been on their shopping list. It has been keep coming in very often there. So keeping positive on Havells from medium term, coming specifically on Jindal Steel and Power, the kind of run up which you have seen, I don't think that the fundamentally justify. But when you have this momentum kind of things, when the institutional buyers are seen to be aggressive buyer, because if you take purely on a fundamental basis with debt of 45,000 crore and with the present capacity and all sort of things, I think the stock looks quite expensive among the steel sector, though we have been very bullish on steel stock on which we have been giving buy call on last 1 year or so. But I think after having run up so much, Jindal Steel and Power should take some respite. In fact, we have been keeping a cautious view maybe for last 1 week or so, when it has been ruling from at a level of about 250 or so.
Okay, all right, Mr. Tulsian, thank you very much for joining us and taking all of your queries, giving your perspective on the stocks that we've discussed. Time now to bring in Sushil Kedia, founder of Kedianomics, to get his sense on this mega rally that's underway. Sushil, some people in the market are just tired, wondering, whether this is just going to continue day in and day out. There are others who are hoping for that small entry point, but they're not getting that. Let's get your, immediate target right now on the Nifty or the Sensex, whichever index you can, track for us. Sushil, wanted to start by getting your next immediate Nifty target.
Much before that, just get back to the first plate, 30K to 31K. Took a lot of time, 814 days. We're talking about a market breaking out of a 3-year consolidation. We all wore those 30,000 t-shirts, which, we couldn't get a chance to wear after a long time. Right. The Nifty hit 10,500, in July or 10,000 in July. And after that, it spent so much time between 10,000 to 10,500. What you're seeing right now is a bit of a breakout. Of course, in the near term, things are heated. And, there's a good chance that, they get heated a bit more before sanity prevails. But don't forget the last bull market. Sometimes these levels, the market will make mockery of these levels. You go to 36K, you're saying that, should I book profit now? What if it goes to 37K, 38K in one go? So right now, you don't want to bet against the market. Right now, you want to respect the market. Yes, get risk management in place. The market, I think, will give you signals when it's, when it's about to take a turn. Maybe that would be the time to book some profit. You may want to book some profit right now itself. That's your call, individual's call. But just because, the run has been fast over the last 1,000 points does not mean that it ends right at 36,000 and not goes on to 37,000, 38,000. Normally, you make the most money in the last phase of the melt up. It's key to be there while that move is happening.
I take your point, and I mean, whether we can debate whether it's a young bull, like Sushil said, or a middle-aged bull or a teenage bull, that's a different point of debate, but it's a bull, and I guess if you stand in the way of a charging bull, we all know what happens, right?
Oh, yes. But anyway, let's get some more thoughts on the market since we did hit record highs. Earlier in the day, we spoke with Ramesh Damani and a couple of other market veterans as well. Just listen to what they had to say.
I think most market veterans have been telling you for a long time that this is as good as any other level to stay invested in the market. I think we might see some rotation from the smaller caps to the larger caps now, because I think there's some value and money coming into the larger caps. But broadly, I think the answer is to remain invested in high-quality businesses. Regarding caution, look, we always need to be cautious in the market. I think the day we are not cautious is when the market punishes us desperately. But having said that, you know, am I fully invested? Yes. Would I put fresh money into the market? Yes. Can there be a correction tomorrow? Yes. But, you know, that's the nature of this business.
It's a milestone which has been achieved. Finally, our dream of making Indians richer in Indian equity market is getting realized. Flows are coming from every nook and corner into mutual funds. It's coming by SIP, which is even better. So feels very good. There are pockets of exuberance where one has to be cautious. But overall market, you still can get an opportunity. And there are certain sectors like IT where there could be potential catalyst either in terms of growth or in terms of rupee movement, which can again give you good returns.
I think the Indian investor needs to be congratulated, you know, for being a catalyst and the real pillar of strength behind this excellent move that we've seen. And I must say that this bull market is very unique. You know, it's very different to what we've seen, you know, in the last 20, 25 years. I think the power of domestic money has really killed volatility. In this particular move that has transpired, you know, the maximum correction that we've seen is about 5%. And that's really bringing in the, you know, money into the market because people are not seeing those violent corrections. And that's really building the confidence. I think we've been working with our target of about 11,111. So once the Nifty gets to that mark, maybe we will review our scenario.
Ashwini, your thoughts? You know, we are at all-time highs. The market surging. Is there a risk of an accident, or do you think this is still a market in which you want to buy?
Well, the issue is that, okay, last 1,000 points was 6 days. Okay, next 1,000 points, 3 days. Then next 1,000 point, 1 day. So, you know, the less the number of days, the weaker the move. The more the number of days you take to cross a certain level, the stronger that support becomes. So keep this in mind that this kind of strong momentum cannot continue for all times. The best strategy is you don't know the high, I don't know the high. Keep selling 10% of your portfolio each time you see a 100-point move above 11,000. If you keep doing that, maybe by 11,500 thereabouts, you'll be getting out of half of your portfolio. So that becomes your cash. In case there is accident, you have cash to deploy. The risk here is everybody gets in, there is no correction, this is different, you know, India is this, India is that, and then you are hit with a 10% correction and nobody has fresh money to invest, and the money you invested at 11,000 gets badly hit. So, you know, the complacency is not very good for my ears.
You know, Ashwini, you remind me of my own take on diets, right? So every time a friend comes and says, oh, lost so much of weight in, you know, 5 days or 1 week, I have the same analogy saying, no, I think slow and steady wins the race, right? So maybe that's an analogy that works for the market, as you're saying. Longer the time, more the consolidation, more stable and sustainable would be the move.
See, when you have as much hair as I do, you know, chances are that you've seen a lot more going on. So the idea is that these things are not sustainable. So while they are there, it's sometimes useful to take money off the table.
Okay. Prakash is laughing. He still has a couple of more here than Ashwini.
Collecting wisdom on our panel.
I think in 5 years, Ashwini, I'm headed your way. Maybe not in terms of market wisdom or wealth, but at least in terms of hairline, I think I am also headed there. But anyway.
Okay, so maybe it's a good time then to bring in the outlier. We also have Prashant Prabhakaran of Yes Securities with us. You know, hair or not, the fact is that this is a market that is just going up and up. Prashant, so what would your thoughts be? Let's actually, you know, come back to some of the big earnings that we've seen over the last 24 hours. We heard from a company like V-Guard, Havells, decent set of numbers. We will hear from Indiabulls Housing Finance, heard from DHFL yesterday. Your thoughts on any number that really stood out for you?
Actually, the lot of nifty numbers that have stood out, lot of results which have come from the nifty pack which have been encouraging. The ones that have been laggards, be it Axis, be it any of the other larger names, Reliance has shown results which have been good. You have had other players which have ended up showing solid results. These were the signs that we have been waiting for to end up giving the valuation some amount of comfort that has been there. So when the numbers are coming in, markets with liquidity and finally earnings showing some signs of recovery on that side of markets have shown strength, and it continues to show strength. It won't, our assumption is that it won't correct too much, but no harm in keeping tight stop losses or buying out some long-term protection for your portfolio for a year. But if the results continue in this fashion and we continue to see the upward trend in the earnings trajectory, I guess we are in for a long-term bull run.
Okay, in for a long-term bull run. Good afternoon, Prashant. So let's talk about some, stocks which have done well today. Metals in particular. Anything that you are recommending to your clients at these levels?
So the steel pack has been doing well for quite some time, Manoj. If you ended up looking at the Q2 numbers as well as the Q3 numbers that we anticipate that are going to come out, it is going to come out strong. There has been a top line growth as well as operating margin growth. Most of these companies were in the range of around 70-72% capacity utilization. Those numbers are seeing an uptrend, and there has been strength as far as numbers overall, as far as margins is also concerned. All positive signs, and if the rollout and the budget ends up giving an expenditure spend on the infra side, which is going to be there, there are a lot of other ancillary units which will keep on. We have just started off. If we ended up having a period of this trend that is going to continue, where you will have resolution, your NPA numbers of banks are coming down, there are resolution in a lot of other counters. A lot of the larger corporates which are into problems will come out of the trap that they are right now, and you will end up having strength in all of these steels, metals that have gone through a bad patch. Sure. I think so we have just started off.
And there you see more sights and sounds from Davos. The Prime Minister there, in a short while from now, he would be addressing and making that keynote speech. These are just visuals that are coming in from Davos. Quite historic for India. First time in 20 years that we have our Prime Minister participating and also addressing the gathering. So that will be an interesting one to watch out for. Roughly 3:45 p.m. our time. And of course, we will take you live to the scene of the action. Well, on that note, let's get you some more market opinion that we gathered today. We were in conversation with Manish Sonthalia, head of equities PMS at Motilal Oswal in the morning. Asked him about his advice that he would give to investors at such heightened market levels.
The whole point is, at around the budget time, you have a whole lot of excitement and a lot of anticipation, expectation starts to get built up. But I think this time around, as far as the earnings season is concerned, you have some solace that the earnings so far have come good, except for the few paint companies which have not reported so great a number. But otherwise, the numbers have been great. Except for, let's say, a capital gains tax, if it gets introduced in the budget, I don't see how the markets can fall. There's just lack of sellers in the markets now with on the back of earnings coming forth. I don't know how the markets are going to fall.
All your top stocks, whether it's Reliance, Infosys, L&T and Axis Bank, have all hit new highs today, either 52-week or record highs. So, Manish, among four of these names, where do you see the maximum potential now? What looks most lucrative? Reliance, Infi, L&T and Axis Bank?
No, so, it's difficult to call specific recommendations on stocks, but one theme is particularly very clear for calendar 2018, and it is a cyclical recovery. Anything to do with cyclical recovery is going to lead from the front. So whether it be the, infrastructure, construction related companies, whether it be refining, petchem, commodity related companies, whether it be corporate banks which are leading the cyclical recovery on the higher side, they will all be at the forefront of a up move.
When you say cyclical, would you still buy metals?
I mean, we can be very selective about it, but we are not averse to looking at metals, but the whole point is we must be fully confident about the stock that we are buying.
Okay, 357 higher now on the Sensex, and And just moving some of these names has been just phenomenal. Just pull out the chart of Biocon for last perhaps a week or so and see the kind of move it's made. You know, we've been talking about new highs for that stock. Yesterday we were discussing that 4% move in Biocon. On top of that, it's seen a 6% move. Just pull out the intraday chart of, you know, GAIL, HPCL, the couple of erstwhile laggards where we've started to see some move. GAIL in particular is looking quite interesting. Right now up about 4%, and HPCL as well up quite a bit. Still in the red, but trying to make a move back into the green. Prakash, any thoughts on HPCL or GAIL?
Yeah, GAIL I think is going to levels close to 490. It's very easily going there. 465 seems to be the stop there. And I would say that as far as HPCL is concerned, yes, I think it's some kind of a tough bet there. But I don't think much downside here. Looks like a trading support closer to around 380.
By the way, more stocks on the move. Again, just examples of the way stocks are being lapped up. Venky's 11% higher as we are speaking right now. So there's plenty moving around on the screens there. Just about 2.5 minutes to go. So Anuj, you know, should we start recapping what's been another phenomenal day for the street? And you know, it's across the board today. You can't complain. Nifty Bank, metals, large caps, mid caps.
You know, there's one more point I want to make. You know, you have 2 more days left in the series, and you know, once again in expiry week, it's about momentum, and after that you head into budget. So this is a classical pattern of that pre-budget melt up. Will be interesting to see what happens post-budget, Surabhi.
That's what I'm wondering. If there's any minor disappointment, do we get a big sell-off on news after budget?
So that I think would be the risk, and that's what you would want to see post-budget. You know, what is the market's reaction? Not immediately on the day of the budget, but maybe a week after the budget. I think that's one thing which you should maybe want to keep on board. But for next couple of days, things could get really interesting. In terms of stocks that moved, of course, there were 3 or 4 pockets that moved. Banks, ICICI in particular, State Bank of India, the others which are not part of the index anymore now, the likes of PNB, all these stocks moved. Big move in metal names. Vedanta was up 5% by the end of the day. In fact, new 52-week high on that stock. Hindalco as well up about 4%. Tata Steel, oil and gas stocks, couple of them at least look good. So GAIL and ONGC, the upstream companies, were higher. Then of course IT, Tech Mahindra, HCL Tech, Infosys. Yesterday was all about TCS. Today these stocks had a bit of a follow through, and some kind of catch up was happening in some of these stocks. Apart from that, Axis was up about 1.5%. It's ending at fresh 52-week high. Yes Bank up about 1%, Lever up about 1%. There were a couple of stocks which dragged the market to sort of cap the market's gains. There's something wrong with Eicher Motors. This is one stock which earlier used to be the first to make new all-time highs. It's now a stock which has corrected quite a bit. In fact, it's down 11% this month and down 20% from its peak. So Eicher is one stock where there is some bit of issue. Eicher Motors is the one that I'm talking about. Apart from that, there was some bit of downtick in a couple of other big names like HDFC Bank and also Ambuja Cement. But overall, stunning day.
Absolutely. You know, Anuj, I'll start off with some of the banks. As you were saying, there was a great day for PSU banks, and not just the biggies like, you know, PNB or SBI, but a lot of the mid-cap names also did well for the day. So, you know, Andhra Bank on the higher side, even Allahabad Bank about 3% higher, Canara Bank 3.5% up. Even the others, I mean, even a Karnataka, Vijaya, basically banks were looking very, very good throughout the session. Then you have mid-cap IT. That is a relentless rally that continues. Ahead of numbers, KPIT Tech managing to go home with gains of around 3% odd. Let's just see the final rates. Okay, 1.5% now. Vakrangi, again, continued to build on momentum after results yesterday. We had a good move on Sasken. Even though the numbers didn't look all that great, there's actually, you know, margins were just about okay-ish quarter on quarter. But again, there, the market chose to give the stock benefit of doubt. So Sasken about 5% on the higher side. More names, Biocon 6%, Havells on earnings 6%, Radico Khaitan 6%. We're talking about the metals rally. So of course, big stocks like JSW Steel had a good run, even SAIL, another 5% today. So big moves coming in on most of these names. Then there were the late movers, Dish TV, managing about a 3% up move for itself. There was, of course, tremendous buying in Delta Corp. It was one of Ashwini's calls as well. 9.5% is the last count. The one pocket that has seen a very clear correction, one is Canfin Homes. No room for error in this market if numbers aren't going to enthuse, and their loan growth has come down. Once again, this is a quarter of lower loan growth. So that didn't go down well. DHFL saw a lot of correction in the dying moments of trade. Stocks ending with a cut of around 3. Okay, make that 4% on DHFL. And Mannapuram, we'll watch out for this NBFC tomorrow. Numbers will be out. Also ending on a slightly subdued note. Anuj?
Yes, let's take some final thoughts then from our guests. Thoughts on Can Fin Homes, Prashant, corrected quite a bit after the numbers.
So if you look at the affordable housing space and the home loan space, the NBFCs that have been there in that entire space of Can Fin has been one of our recommendations for quite some time. It has given returns which have been reasonable, but has gone through a flattish period. Our assumption is that in the next 2 quarters, you'll see growth that will slowly start coming back. The only catch in Can Fin Homes is that they still have a large builder financing book in their entire pie. So unless you see a recovery in that cycle coming in, you will have Can Fin Home remaining a laggard for some time to come.
Okay, let's take final thoughts from our technical experts as well. So Ashwini, 2 days to go for this expiry. For now, what's the trade?
See, while market breadth closed in favor of declines, so it's clear that, large caps have the market in their hands, and, broader market is not doing that well, but large cap, 5 stocks, 2 from IT, 3 from banks can easily take the market higher, and that should remain the story for next couple of days also. We open well and then somewhere mid caps kind of drop off, and large caps carry the day. I think even if it's a not so great budget, we will continue to move higher, maybe 2-3 days of sulking and then moving on. So chances are that unless there's a tax, etc., I don't think the budget will greatly disturb this momentum, because this has nothing to do with us. This is a global momentum, and globally I don't think they have budget at that same time.
Okay, final thoughts, Prakash, from you as well. Looking at the momentum, would you sort of look at fresh longs tomorrow morning itself again, build on this?
Looks like the next logical technical targets are 11,138 to 11,068. As long as 11,030 holds, upside is on. Looks like some more short squeeze on Bank Nifty is possible here. Bank Nifty could propel Sensex up.
Okay, all right, gentlemen, thanks very much for joining in, taking us through what's been yet another exhilarating week for the markets. An exhilarating day. Week, of course, is still well and truly on. We still have 2 more sessions to go. Let's see how this rally continues. 36,000 on the Sensex, 11,000 on the Nifty. Quick break on that note. We'll come back and focus on some of the key expectations from United Spirits. Those numbers due later this evening.